For more on the markets, I want to bring in Thomas Hayes, chairman of Great Hill Capital. Thomas, good morning to you. Futures
Morning,
rising
Jill.
this morning, a bit of a rebound in oil. What are you watching this morning?
Yeah, well, Jill, I was on several times with you before the election, and we were always emphasizing the reopening trade, energy, banks, defense and aerospace stocks. Well, the good news is many of those have run up 75, 100, 125%. The bad news is I think we're due for a rest. And the reason is what you saw in the last few weeks is that hedge funds got extremely short treasuries. Okay, so it was a crowded trade at a complete extreme. So while the hedge funds were shorting them, commercials were buying them. And what we've seen now is a short-term reversal of that trade, and yields are stabilizing. And effectively what we're going to see happen is those groups that were hurt as the 10-year treasury yield went from 100 basis points to 175 basis points in about 7 weeks in February and March, are going to be the beneficiaries. So what was hit? The yield-sensitive stocks. Utilities were hit, big pharma and healthcare was hit, consumer staples were hit. And we think that while the reopening trade, value and cyclicals is going to do well by the end of the year, we do think they're due for a pause, and we like those yield-sensitive, those stocks with dividend yields twice the 10-year yield now that yields are stabilizing. So that's really where we're focused, Jill.
When you say a pause, you're not talking a correction. You're just thinking kind of like a breather for some of those big
Correct.
tech names.
A breather for the reopening trade. So a breather for some of the banks, a breather for some of the energy stocks. And those sectors that were hit, certainly pockets of tech were hit in the last 7 or 8 weeks as yields went up so quickly. So they'll also, in some pockets, be a beneficiary along with utilities, big pharma, and staples. But as far as getting bearish or a major correction, look, we've had $5.3 trillion of fiscal stimulus. The Fed's increased their balance sheet by $4 trillion. That's $9.3 trillion. We're approaching 45% of GDP in stimulus. And the contraction of GDP last year was only $750 billion. So we've got 12 times the solution to solve this problem. Very hard to get exceptionally bearish here, but we're looking for the rallies under the surface and the rotation. So banks and energy have dramatically outperformed this year. We think they're going to finish the year higher, but in the short-term rest. And what will take their place is those stocks that were hit by the huge rise in yields that's now stabilizing because the short treasury trade is reversing in the short term.
Okay, I'm not looking to be a Debbie Downer because I like the optimism. I'm just curious, though, is there anything that you could see derailing this bull run? Is there anything that kind of keeps you up at night like a wild card? Because it feels like, to your point, we've got stimulus, we've got the vaccines out there. It seems like things are moving in the right direction.
Yeah, so David Kostin from Goldman Sachs was out yesterday. 2022 earnings estimates are about $200 for the S&P 500. He's estimating if the corporate tax rate goes from 21 to 28%, that's going to take 9% off of earnings, and that'll take earnings down to $182 for 2022. And in that case, the market would have to re-rate to account for that. Now, will that be offset by all the stimulus and another potentially $3 trillion of infrastructure and Green New Deal on the way? It remains to be seen. We'll see if that does, but the tax increase would hit earnings directly, and that might be certainly something to watch out for moving forward.
Let's talk a bit of GameStop, which reported earnings yesterday after the close. That stock plunging in pre-market trade this morning. They missed both the top and the bottom lines. Your take?
Yeah, well, they definitely missed on the top and bottom line. That's the bad news. The good news is e-commerce sales were up 175%. It now represents 34% of overall sales relative to 12% this time last year. So the e-commerce transition is starting to show a little bit of traction. There are a lot of hopes placed on Ryan Cohen and his other 2 board members. He's brought in a new COO from Amazon. He's brought in a new CTO from Amazon Web Services. So that's the good news. The bad news is that they had to sell the private jet. They paid down some debt. They raised some cash. But when you see that they're going to replace the CFO, they're not taking questions from analysts, and they're suspending guidance, any other company in the world that said no questions, suspending guidance, and we're changing our CFO, the market would absolutely not like that. But I think they're giving the benefit of the doubt to the founder of Chewy, Ryan Cohen. He knows the e-commerce space, but it's not going to be all blue skies, Jill. There is competition. There are a lot of Netflix-style gaming services out there. Apple's got Arcade, which is $5 a month. You can play 100 games. Google's got Stadia, which is $10 a month. You've got free games like Fortnite, like Roblox. So they've got a long way to go. The consensus price target on the street from all the analysts is $14.64. Optimistic analysts are at 25 to 30. I think if Ryan Cohen delivers, a couple years down the road, maybe the fundamental intrinsic value is $40, $50, $60, but $160, that's really hard to get your arms around. And of course, what the market didn't like, which the stock was down 12% now pre-market, is they said, hey, the stock market's high. We're considering selling at the market shares to raise money for our transformation. Well, if they sell a lot of shares, guess what? That's going to dilute the people that are in the stock right now. And to sustain these levels is really going to be a hard thing to do moving forward if they're selling stock and they're not meeting the expectations as fast as some of these traders are anticipating.
Not that it matters at this point, but do you think that they should have taken some analysts, some questions yesterday, just given how much this company's been in the news, what's been going on with the Reddit rally? What did you make of just that no comment?
Yeah, 100%. When people say no comment, the immediate indication is you think that they're hiding something potentially. Now, they may say we have no comment because we don't have the plan. And really, the street has been waiting for Ryan Cohen to come out with a crystal clear plan saying, this is what we expect to do over the next few years. This is how we're going to do it. And they've been very silent. You've got 3 people on the board. It's been, over a month now. The market is really looking for some guidance. If it's going to be so great, just tell us how. There are many people that want to believe the story and are willing to pay up for the story, but you got to give some details, and taking no questions, offering no guidance, and laying out no plan was not a positive thing for the stock in the last 24 hours.
All right. Thomas Hayes, chairman of Great Hill Capital. Love getting your perspective. Thank you so much.